I mean, this is the initial decline that we just had. I mean, trade you 61.47 all-time high, five waves down. That's how I can count it. Three up, five down. So this is considered a zigzag. Five down, three up, three, five down. So if this is a zigzag, then the market just has to give us another five-way move to the upside. After three-wave correction, we have we need a motive wave to a five wave to the upside. So in order to move up, first of all, we have this channel. And look where the price is fighting here. First move, like if you drop a channel connecting this high, the very high to this high. Did I lock this one? Yeah. And it made a move here, sold off, made another attempt, sold off. Then yesterday, then almost another attempt right there. That's when we ran out of time into a close. So that's what the bit of a spike. So right there. So it's going. Look at this low to the middle of this channel. I know how to draw channels. I gotta pay attention to these kind of things when I post them. These channels are really good with Elliott. Really good. It works really good. So I mean, I can make a case of five and two, sorry, five and three. So that give us an eight swings. So you can have a five here and three here. So from here, we need to make that push to the upside. Now the point is this, that if we manage to rally 58, okay, this is how I measure moves, and then you have to take the data as well. There is a way to play the data as well. So I will tell you that. So from the closing price of yesterday, 57.67, if we simply take this measured move, that's what we're just be reasonable for now, right? We understand that the three versus one, 161.8 is at 59.34. That's fine. We need to go that far. So if we just take a closing price as of yesterday and say like, okay, at least we can play a measured move, that is a 2.44%. So that's 2.4% here. Now you take 3.64, okay? That gives you less than 1% for the whole quarter. If this happens in next week. Now, at the same time, we know that the market is chewing time because of the April 2nd, right? Can we expect a 2.45% move to the upside? I mean, anything can happen. I'm just like trying to be a little bit more, just a little more reasonable, just trying to think like, okay, if we would play this move for 1 week, with knowing that market there is waiting for April 2nd, can we expect a 2.4% move at least to a 100%? Can it happen 1 week or will happen next month? We need five-way move. We know that in order to make a case for a third wave, it has to be minimum 100% of wave one. Yeah, you can't put a three here like this. So this entire decline that we just had, the 50% retracement is 58.17. So that cuts it down to half at 50. So this is the typical target I would that I am trying to see if we can get this breakout. If this kangaroo can make a jump to clear this channel. I like to see the close. Sorry, I like to see the breakout, a close, a retest, then make a move higher. Yeah, you don't want to make a a fake move and then make another reversal to the downside. Yeah, you want to break this, you want to hold, you want to close on based on intraday, sorry, on a based on intraday close, retest, then you can make a move higher. How the breakout happens. You see all these fake ones? Look down here, here, here. The prices finally made a low here because I connected this low because I don't had these lows before. You always take the first one, the extreme low that you had. Then you project it back to the very high to the initial the where you had the actual bounce and just leave it. You can always extend this thing all the way out and then you just see how the price is gonna have a throwover down here. See the prop the at this then you can expect the same throwover here as well. There is no throwover here. That's why the price is fighting. I'm gonna show you a couple scenarios. I mean, this is making a bull case, but at the same time, we don't have a higher swing except for this one. All these three swings are down because what happens here, one, two, the third bar supposed to open higher didn't happen, it was lower. That happens like this. One here, two here. Look at these three. This one, this one, this one, not this one. Dow managed to close in an inside bar, an inside day. And then what happened next day? Market moved, the Dow made a higher high, three, swing turn up. Now you have one, two, and three without the lower bar. This one, two, three. See, you didn't get the third one. This one here, you got the fourth day, you got the higher bar. That doesn't help. Look at this and this. And then yesterday, all four sides were lower. This one, this, and this. We need three higher highs. And so that's when you see this line right there that appears. They will appear that line. There's no line here, as you can see. So with the price works on the wave count, or the price works, it's the same price anyways. But it's just a different, that's Elliott versus Gann. So for me, I mean, I can turn this thing around in 10 different ways, right? I cannot do anything here. This is simply based on high and lows. Closes, whatever the close happens. But looking at a 5 MA moving average, so it was all green until yesterday. So yesterday close was below the 5 moving average. Yesterday close was below the 5 moving average. Yesterday close was at above the 5. You see, like this was above as well. See, it's all green. Anywhere you see green is where the close was above the 5 moving average. Anywhere you see the red stripe right there is where you see the close is below the 5 moving average. I mean, you can change it to any period you like. It just 5 is just basically gives you 1 full week, right? This can play out. Does it looks it look like gap down, yeah, gap down. This was a gap up. There's a gap still open. There's another gap here. It's a very small gap up here on the very top. It's what I'm saying. It's just, it's a kangaroo market. Gaps all over the place. Just which one is going to get filled? Here, here, this, this, no, here, and you have one up there. You can't, I mean, most of the acceleration gaps closes. I mean, future market hardly gaps. I mean, if it managed to gap down or gap up, I mean, it will close much faster than the cash market. But the thing is, this is like futures are up green all night, and then all of a sudden nothing happens, and they just have a 500 point drop lower. And then from here, the market's trying to make a reverse back up, like they're trying to make a full reversal to the upside. Then the next day comes in, you got another gap here. There goes another low. There's another reversal. There's another decline. There's another gap at the open. Made another low yesterday. Fill the gap again. You see, like this is not an easy price action to trade. Anybody can sit and talk. It's just it's not easy to trade this kind of a nightmare. Back and forth gaps with everyday reversals. You know, down here, reversal. Gap down, made a low, reversal. Gap down, made a low, reversal. This is 4 days in a row. I mean, this is the week that we just, what are we, the 17th is when 17th is right here. This is where the whole week was started, right here. So if we go back, uh, this is the whole week we just had. Nobody's gonna make money in this kind of price section because then nothing's gonna hold either. You're taking a hit. Now you need you making a reversal. The premiums are getting just toast. And everybody thinking like, well, no, we all thinking like, oh yeah, we had a dip, got bought out, and then we just rip right back up, and now we should continue. No, we don't. We just, you see, back and forth, gaps after gaps after gaps. So we'll see what happens. I mean, it's going fine for now, and we're just gonna keep track of it. I mean, I post this thing almost 10 times a day now, as you guys know. I don't really do, these 15, 20-minute charts, but I was like, you know what, there's just back and forth stuff. I mean, price is price because these are smaller time frame is never, it's not easy to count, but you don't have to worry about that part. But we'll see what happens, and at 5600. This was a pretty, I looked at it yesterday because we gapped down and I was like, okay, here's my 3850 and 61.8. I was like, I know we got a gap here. It's like, so we're just gonna see. I know we have a OPEX and all this and this, but then I did a C versus A, took the initial decline projected from B. I was like, okay, 100% is right there at 5605. So yesterday low was 5603. What is this? CNBC is sending out a breaking news. AMD AMD CEO Lisa Su has already vanquished Intel. Now she's going after Nvidia. Yeah, they need to fire this woman, to be honest. Fire the woman without notice. Um, the this is we can just leave it here and see if we can get the breakout bit of an upside from here because 38.2 is at 5741, right? So this 5741, it fills this gap right there. As you can see. Okay. So this is our upside zone. That's how I see it for now. And then the 100% measured move of this 5805, which we just talked about, most 2.44% move. The move for the next week is just a big ask. But this gap right there fills right there, 5842. This will be so this whole thing right there, of, just do. make something like this is we just gotta have to look and see how this thing's gonna play out. 100% measured move. First, we need to get at least 38.2 because we only did 23.6 right there, 56.50 of this initial decline. We haven't even made it to 38.2 yet. So that's our upside zone resistance, channel resistance. Here's our downside support at 56.03, 5, and we'll see how it goes. That's it. That's the S&P cash. Now, back to the same point. If this is all of three of a zigzag, this is trying and to see if we can make the bull case, but we need help here, right? So it is working side by side. So the wave count is going at the same time. Again, is working as well. So this is what I watch side by side. But I need the confirmation from here, you know? That confirmation from there for the higher swing will give us the same upside here on the wave count. So that's how you can make the Gann and Elliott work side by side. Two different strategies, right? They both cannot be wrong at the same time. One is going to be right, always. My wave count can be wrong, but Gann is not going to be wrong because it's just, basically looking for highs and lows. Now, if we do go back to the daily time frame, okay, which is right here. This is the August low. I mean, I have this as an expanding variety diagonal that fits right. Not a very big fan of a third wave, but this is what it is. Susceptible. 4 and 5. Now, if we look at the 3 versus 1 that we just talked about from the low here, right? From this bear market low. So it's the same, like, I shouldn't get this. So we're looking like this. 1, 2, up and 3. That's 3 versus 1, which is this 261 point. This is where we just had a 10% drawdown. I'm not worried about none of that stuff. People like to sit and compare a 50-year-old chart and go sit and waste your time. I don't need it. I just need this. I just only need this side. It's more than enough for me to, I can scroll down like 2 years is to me is more than enough to trade them to find multiple patterns and all that kind of stuff. I don't need 10, 15, 20 years of data like everybody else is sitting and doing in a non-log scale charts. Anyways, the guy yesterday was sending me that thing. Um, Ruben? Yeah, on Tesla, I believe, and I looked it up and I was about to have a dinner and I was like, yeah, tell the guy to turn the log scale on. It's just pure nonsense, which you just post. Doesn't make any sense, but that's what it is. Um, this one, this initial decline, if this is all of a zigzag, so we need to at least have a five-way move, then another three-wave down to make an eight swings to look for an upside. Okay. That will be the initial start. So there's plenty of work to do. Okay. So we're like in a very early phase because we need to at least somehow manage to complete a five-way move. A five-way move can be a motive, it has to be motive, or it could be some sort of a diagonal. That's the only ways we can count five to the upside. We don't have it yet because the swings are down. Okay. Now, if this is all of three, a zigzag move, then we should slowly recover back to the upside. But when we go back here to a daily time frame, we just take the same initial decline with ABC here, right? So the ABC here that could move like this, or we can make a case here for a complex, okay? Because this fourth wave compared to this second wave is very directional, okay? A fourth wave are never directional in just one, you just go like this, okay? Even the last one that we just looked at it, yeah, it has a very sharp reversal. Anything can happen, okay? This one, at least you have a quite a bit of rally to 50% here. And then you had a drawdown here that's just made a three-way move. This one right there is very shallow and is way more directional and a much on it's at a much faster pace. I was I watched it was on Twitter and Tom Lee was talking about this is the fifth fastest 10% decline of an S&P in the history. He was saying fifth fastest 10% decline in the history of an S&P 500. I mean that dude pulls good data. So the point here is that to me, looking at the the a three-way move, okay, I think this thing is gonna take some time. Okay. So there's gonna be a bunch of back and forth price action because we're dealing with a bunch of zigzags. But I don't know what's gonna happen, but we wanna have to have our plan that if this side doesn't play out, our is then this side is gonna play out for sure. Okay. This is why you gotta have to think ahead of yourself, thinking like, okay, if my plan A doesn't work, what is my plan B? Right? So the stocks that are down for like 8 weeks in a row or something, are they are ready to move? I'm pretty sure they're gonna move. They're gonna at least make some of them move, right? What are you expecting? What, like another, uh, 3, 4 more weeks of a decline? Like, I mean, what are the extremes on some of these mags? But we'll see. We have a lot of stuff coming out. I mean, April 2nd, then we're gonna same, CPI, PPI, and then boom, there we're gonna start the earnings season. Believe probably on the 16th or 17th, the financials gonna start reporting earnings. Um, it's just if we make a case here for a fourth wave, So we just take this as a three-way move. Now we need a three-way move to the upside. That will be a connector X. X is the typical retracement of an X wave is 50%, 261.8 in this kind of area. Now we talked about this 58.2, 5812, which is right here. It's close because I projected this one here. Oh, this one. This is a one daily bar. You see when you work on a higher time frame, your fib's not gonna almost gonna match because you see the low is here. So as I always says, like it's gonna be close, but I can see it both ways. It doesn't really matter. So if the price rallies here toward this 50, let's say toward this 5805, I can see 5812 and 5819 here as well. So few points really doesn't make a big difference, right? The point here is that if the low holds this low, okay, 5509, we had the initial move, B wave. This is a typical 50% retracement is B wave is a 5600 kind of area, And now we're back to this 5667. Now I just want you to pay attention to this. Why is this level is so important? This. Look where the close was yesterday as well. When you're gonna break this, when you break this major resistance, this is because this is where you had the initial decline of 10%. Okay. So you made a move higher, backed off, then you made an attempt, and then you cleared. Then you came back down. This is how breakouts happen. Breakout, retest, then you go. Then you start making higher highs. Okay. And now what happens is when you break this thing down, you see, market just gonna go right back to this zone right there because this was the broken support. Now it's acting as a very strong resistance. It's trying to poke, trying to break, trying to go back up, but just keep failing. It will. Because you have several, 1, 2, 3, you have 3 or 4 days of close below this support as well. So right there. We need to clear this along with this resistance. Get to this, get to this upside from here like this. This cannot be X. That's short. I mean, we need another A and then another B and C. But that's just, well, it's gonna play out over time. But we don't know that. I mean, it will, but it might be just starting to just move right back up. What I want you to watch is two zones. This one, 5490 to 5580, right there. Okay. So this is the first zone that we just got the bounce from here. And we're going to leave it like this. And the upside would be this for the connector X. And then from here, the price has to give us another leg lower from this another zigzag, 5, 3, and 5, bring it to this zone. That's where the Y will complete toward this support. Okay. Then from here, then we'll have, I mean, technically it's considered as a flat connector X with the zigzag. That's the combination. Okay. A flat connector X with a zigzag. So you have 5, you need 5, 3, and 5 to complete a zigzag. So this is making a case here for slowdown, tariffs, the world will come into an end, blah, blah, blah. Okay. And then from here, we look for this fifth to the upside. Now, if I throw a time here, it's gonna put us all the way until June. So that's the external time frame, and then I gotta have to run time between these in between to kind of give us a downside time window. So yeah, this is what I have for market to, because you have to, I mean, to me, a slowdown doesn't mean a market crash. Slowdown is a chop. There's going to be some sort of a fourth wave. That's where the rally just takes a pause. What I'm planning to do is is uh, is to put some hedges to the downside. I'll play the upside, but just I did the last one, okay? And I wasn't expecting that thing was gonna max out that fast. I thought like, okay, we're gonna be slowly, we're gonna, take a bit of a leg down, and it just that thing just went up to a complete max downside. I was like, well, there's nothing there much left. So like, okay, well, just close that thing. There's not that much left there because the downside is pretty much capped on that spread. Um, I wanna, but my plan is to put some butterflies in this zone and one to the it's very I'm trying to to structure double butterflies, one to the upside, one to the downside. It's gonna be three and three. That's six different strikes. It's not easy. So I started working yesterday, and then I was like, and then I started looking something else. I'll see. I'll have time. Gonna see if I can. I need strike prices. A strike price is gonna be. You can't just randomly pick strike prices. Okay, you need to pick what you see on the fib. Your fib prices are your strike prices. So how are you gonna structure a spread or a butterfly if you don't even know what the upside is and what the downside is, right? Yeah, trying to see if I could make one butterfly here and one butterfly here. So, but then I gotta have to adjust the time on those. Like, So I just need I need this confirmation first before I do that. So if the swing turns up, it I mean to me it looks like it will. Um, and then we'll manage to see if we can play this move. That's what my plan is right now, is to play this move to the upside toward this zone. And then from here, that's what I was planning to put some hedges to the downside. From this zone down to this to this. Unless we can just do something now from here to here. Okay. We can do it that as well. But if the price going to go, if price is gonna make this move, these ones gonna get hurt. Okay. I mean, if you don't want to do a butterfly and you just wanted to make a simple spread, you can do those as well. Just make 58, 55, 80, and 55, 5,500. That's an 80 point wide spread. That's your bearish spread to the downside. And if you really want to get yourself out of the money, you got to do 54.25 and 53.25. That's a 100 point spread right there to the downside. It's going to be way out of the money. I mean, if this price managed to make that move higher, this thing is gonna get toasted really good. Because you way out of the money. So that's what I'm saying. It's just like I much would rather do it with a butterfly. The butterfly at least will have I will try to structure it that it will have at least like a positive theta. So at least if the price does manage to move higher and those premiums is not gonna get hurt much, you know, I'm not gonna lose much time. So I love butterflies. So I'm working on it. Just gonna have to wait. I have to figure it out. So spread is always just you can do spreads if you say like, hey, there is gonna be more selling and this and this. There's upside spread right there, 57.45 and 5,800 or 5,820. You know, just pick the same exact fib prices. That's your wide spread. I mean, yeah, S&P is not going to be cheap. Keep that thing in mind. You trading something that is 5,667 points. I mean, your premium is not going to be cheap. Okay, so you're going to pay the price. But it all depends how much delta that you have. It's not about the full premium. So if you could put a $3,000 worth of a spread that only gives you four delta, I mean, okay, that's $1.4. So that's your up. That means this is the upside that I'm seeing, thinking like, okay, if we do start a new quarter, we can at least get a bit of a bounce, trying to see if we can get this a 100% measured move for this initial move from the low. And then from here, we'll see how the Trump world and how what kind of a news and what kind of a data comes out from here. That would be the case that I would think can happen with earnings and all that kind of stuff, you know? So this is the complex correction. And from here, and we have this fifth goes to the upside. Okay. I don't really do much to this one. I haven't done anything for the last couple days. Just leave it like it's just working on its own. I'm just gonna just leave it the way it is to see how much of a retracement do we get to the upside. Do we go here to this to this? This is the upside zone. I won't even do this one for now. Just leave it like this. You can always open more upside, but you have to look at the ATR as well. I mean, if the market is only expected to move on a based on a two standard deviation move as at the extreme wall, crazy move. I mean, why are you even looking at a 3, 4 standard deviation move? It doesn't make any sense. I mean, you're looking at daily time frame anyways. Why are you even looking at a 4 standard deviation move? You want to position something at 4 standard deviation move? Think about it for a second. So you like, let's see, it's a 5% drawdown from the current price to the down. That's to here, where we had what, 3.84% right now from year to date. So down to 54.26 is 4.22. So 4.22 now is like almost roughly like close to 8%. 8% here and 6 here. So 6 here with roughly 4, that puts you at almost 10% year to date, not the initial move. There's a difference. 6% drawdown here to 23, 20, 53, 23. 6 and but is already down. I mean, give it just round it off to close to 4. Gives you roughly like 10. So from the initial from the very top now to this low from peak to trough decline, that puts you at 13, you know? So this is, I don't know. I mean, things gonna get hurt. But to me, I can tell you one thing, that if this is going to turn into a complex, your Y wave is going to be much shorter than your W wave. I can tell you that for sure. I'm pretty positive how how the complex works out, because I do this, I don't do the other one. Here's your Y versus W right there, 54.43. This. This is why I have this 127. I know is this. Well, I'm always after this one anyway, so I can do Y versus W here, and then what is this one? Y versus X. Sure, yeah, your Y wave is going to be your first initial decline, and then your Y wave is always going to be shorter than your W. I mean, if this is making a case of a complex, unless we're ready to go like this, that's going to be another nightmare. Keep that thing in mind. But there's no way you can tell that thing's going to go like this. So you have a 3 here. Now you need a 3, then you need another 3, then you need another 3, then you need another 3 to complete a triangle. So that's basically makes it A, B, C, D, E. Oh, it's gonna be a nightmare for all of us to trade this nasty, big, huge triangle on a higher degree for several months down the road. But cannot say anything about triangle at all. It's just, you cannot even tell it is a triangle unless you have this, this, this. Then you can think like, okay, you know what? Yes, I can see there is some sort of a triangle is trying to form now. Because from here, like something happens like this, you can always go like this as well. This part right there is where you're going to give a 100% confirmation that this is going to be a triangle. because they're all a bunch of zigzags. Very, very tricky because once you have this D, then you need another leg down in E. Then you from here, once the triangle completes, call it a 99% probability that you're going to have a fifth wave coming after triangle. Because triangles only formed in a fourth wave anyways, nowhere else. So when you have four, then the next one is fifth. I cannot even talk about triangle because there is nothing to talk about. Just I'm gonna just leave the way at this one for now. See how it plays out with time and price. But that doesn't mean that it's gonna have several bounces. Can be upside. I mean, we'll try to play as much as we can and we'll see where we're gonna get lucky. But if you were to ask me right now that is it that thing is gonna take some time, yes, it will. Because this fib right there, three versus one, uh, this there's a 100% confirmation that we have this is the three versus one from October 2022 low. This is the response that we just got here. So this is a very strong fib. 200 is a pretty good one as well, but this one 55 at 5500. So what happened here when we got to 5500? Very first time from October low, we hit them right there. Managed to make a move higher. Look at this reversal. 10%. Then from here, 10%. I know these two fibs really well for over a decade. Yeah, you don't um, keep ripping higher, breaking 200. You're gonna set back before you go. It's very strong fibs. Market is gonna make a new high once this will complete. What I see is that these tariffs, his policies, whatever he's doing is gonna get priced here. Once
Oh,
everything once everything will get priced in, and then we'll get this move, whatever the low will hold, and then when the swings will turn up, and then we'll just make the case here for the fifth wave. Now go back to the weekly time. Remember, we had the initial decline, right? So the week we just had, we had a one higher bar here on Qs, one higher bar on the small caps which were down for 7 straight weeks. This is all the upside that we get. And look how the open close was. 202, what is so the high was the low? 201.76 was the close, 203.79. Like less than 2 points for the whole week after down for 7 weeks. Talk about an oversold bounce or something, you know? And then here, it was still close an inside week. So this is like, I mean, I don't know. I mean, how often do we see this? This is crazy. If you really look at this price action, look at all we haven't had a single higher bar here. Now including this, the reverse this part. Make the whole thing right there. 3, 6, 7. 7 weeks. Now go back and look and you can see like, okay, well here we had 3, 6. This is what I'm saying. Like this is due. Like this Dow is gonna should make a move. Because if we take two swing time wise, 6 here, we should rally next week. 6 here, you see? 6 and 6. It did made another low for the seventh. 6 and 6. This is what they call the bar to bar time relationship. Take the first initial swing. How long it took? 6 weeks. Then you had the initial move to the initial swing to the upside. Then you have 6 weeks to the downside. That goes side by side. 6 to the downside, 6 here. Now from here you should be able to get price should recover from here, but we're still here. So we'll see what happens. But this low has to hold now for the sixth week. It's the same thing I'm doing here as well. Okay, I have a pretty good idea when the market should respond and when it's going to move. You see, you have 6 here, 6 here. Oops. We don't have 6 yet. We only have 4. If we need, it has to chew 2 more weeks. That 2 more weeks is going to put us out until April, the second week of April. The market just buying time now. Let's do here. You know how many times we have nailed, like I have nailed these moves with the time and price. You guys know that. I'm gonna size up trades. Just wait. It's 4 here, 4 here. This is good. You see how everything is so all like everything is all over. 6, 7 here, 5 here. It just has to chew that time. Oops. Go here. Go like this. The best way to do it. This is good. Yeah, 4 and 4. It's from the very high right there. This is 6. And this is 6 as well. Yeah. Well, this is already completed last week. Remember I did the trade on this one? I believe last week we did on diamonds. I've been I had them. I don't know, I deleted them before. Yeah, I did those ones last week. I was like 6, okay, let's get the bounce from here because this was the equal time on the swings matches. You're gonna see a response. Didn't really move that crazy, but hey, it paid a few bucks. That's fine. So we'll see. Back to the wave count. I mean, it's a bigger picture. I mean, position something here near the lows, and this is the downside. So I don't know how it's gonna go and how much time. We're gonna find out. I'm just gonna leave the way it is. Um, what else do I have? Well, we have a bunch of.
You, Mo, sorry, can you go back to SPX chart, daily chart? I have one quick question. So you said the time frame, 23.6%, it's the falls on to like June 22nd, 2025. What is the price corresponding to that? Is that the 54.90.72,
Yeah, 54.90.
23.6%? Okay, so that's June,
54.90 is the 23.6.
huh? And that is going to be like June 22nd?
Yeah. See, the thing is this, you could have a time, you could hit the price, but not the time. It's either, because the thing is this entire move down was so fast, you know? So so that means that your fib level is gonna hit much faster than your actual time relationship. But you have to go back here. You see, like this one was you take a zigzag move, A, B, and C versus A, 100%. Now, if you go back here to see, it came pretty close right there. So you got this 100 with this 100 completed here. The low was here, but it completed the next day, the next bar. And that's low. You see that when we didn't break this low, and then from here the price started to recover to the upside. So going back here, if I do, this is going to be on a smaller time. If I do C versus A, it's right here, March 12th. Why do you think that I'm bullish? Like that I'm trying to play the upside is because of this. So we did got the initial bounce, and this is where we at. So the back to the same point is if this is all of this, a simple zigzag move for a 10% correction, we should slowly recover and go right back up. So we have, look, like I can put two wave counts and I can guarantee you one thing that they both cannot be wrong at the same time. One is going to be right. Okay. So we always have to look at things on a bigger picture. But at the same time, I mean, this can take months. Keep that thing in mind. And there's nobody is holding trades for months. It's a lot of time. You look at the time on the bottom of the chart. This is one day for one single bar. I mean, the same nonsense for one single day on a smaller time frame is right here. This is the all the session yesterday on a 20-minute chart. Market closed here, gap lower, that's the low, and this is a whole session yesterday, one session. And if you wants to look at things on this time frame, you have to buy yourself some crazy amount of time on your trade in order to play daily moves. Daily is gonna have your those 50, 200 day moving averages and all that kind of stuff. You know, you have to expand your time scale if you want to structure your trade based on a daily time frame because your premium is gonna have those theta and all the volatility and all that kind of stuff, because more longer you go out on time, now you're gonna pay for the time or you're gonna pay for the Vega as well, and they're gonna have a spike in a Vega when you have 3 months worth of time, your premium is gonna get hurt because you bought time and you paid for them. So it doesn't it's okay. I mean, but you Elliott works great on a bigger time frame. This is not easy to make it work, okay? Because you would have five-way move like this, then you had the initial decline. You always like, okay, now we're ready to go, right? It's always like because I'm always looking for the eight swings. Just like as long as we have a low, like the lows gets placed, okay? And then you says like, okay, fine, I have eight swings to the upside. I can just make the move higher. That the price could make the move higher. Nobody did not. Just give you a perfect example here. It's just you have the initial decline here as your three-way move, fine. I mean, then we got another decline here. Where was something that here? Five-way move, three down, see, double top. This is what you want right there, the price to move higher. Five up, three down, and then you move. You need to break this high right there, and then you need for price to continue. Then this correction will most likely always going to come into an end. So I always talk about it. You need eight swings. Once you have eight swings, this retracement is where the price needs to find support, and then you need to take out this high of your fifth wave of your whatever, one or A you want to call it. You need to make this higher high. Now you have five here, three here, and now you're looking for this third or whatever third or make it C. Doesn't matter if you want to make an A, B, or C move. Doesn't matter. Because this third of a small degree third, bigger third, or C is an actionary wave. So there's a lot of the bunch of dummies out there. They always make a three-way move like this. This is not right. This is wrong. C wave is an actionary wave. It's always going to be a motive wave. One, two, three, four, and five. Or it could be an ending diagonal up and a top either into a C or sorry, wave fifth. A C can be a diagonal as well, or wave five of a trend wave. So we're trying to do the same thing here as well. So I mean, what do you think that I'm trying to fight this last couple days? I was like, okay, we have a clear five-way move. We got a dip. I had this thing marked right there. 5703 is the high right there. See? Price came down, back, went up, backed off. Then another attempt, failed. You see how many times we failed this week? It's just because we need to take out this high in a clear way to break this channel. Didn't happen, which is okay. I mean, it's not in our control. What can we do? We have five. We got some sort of a three. I can squeeze the three here, but we need to break this high. Now we got this damn channel sitting on our head, the wall. This is the high that we're fighting. If we're trying to make if we are keep rejecting, I mean, this is just right at the close yesterday. It's gonna get taken out eventually at some point. If we're just because it's you just keep hitting the wall. It's just a matter of like breaking it. Never know. I mean, futures or market can open up like this on Monday. We don't know that. So the point was this that yesterday I was looking at the settlement print, right? It just makes me like, I always look at this way that 3 weeks ago when we had an OPEX, okay, the index is the S&P. It has a settlement print came around like 56.35, okay? And then 3 weeks later, OPEX, we had like, I think, what was the print yesterday? 56.17. Think for a second. How much is these actually premiums worth? You have 56.25 print 3 weeks ago, and then yesterday's settlement print came at 56.17 after 3 weeks. This premium's worth worth nothing. People talk about, I mean, as as when I learned about this option trading, and I was fully aware, and I knew that this is at either on a CME website as well. Like 70% of the premiums they expire worthless. You know, to me, I think 90% of the premiums expire worthless. I don't even, I mean, numbers are numbers. Based on my experience, I think 90% of the premium expire worthless, not 70. But according to a CME website on the Mercantile Exchange, that says like around like 70, some say 75, some says 80. Okay. But to me, I think 90% of the premiums they worth just they would expire worthless. They have a value for a very short period of time. It just decays with time. So let's say you buy a 5600 call, okay, that you bought it 3 weeks ago. Or let's say you bought a 560 call on a SPY, okay, and you held it for 3 weeks until the OPEX expiration. What do you think that the trade worth? Zero. Even the fact that the SPY did close at 566 and you bought them at 56, 50, 50, 560. So you close 6 points higher. You think that trade is going to have any juice? No, just time just chew it out. The volatility and the time chew it out for 3 weeks. It's crazy some of these positions, like how these premiums actually worth and what are they actually worth? Well, not much. Definitely not much. This is why the spreads are the best way to trade because it defines your risk up front and it tells you that this is what you can make by risking this much. By just holding calls and puts, that's a very it's a totally different game, you know? Because you can buy a one call 1 month out let's say you buy from one OPEX to another OPEX. They're like, okay, you know what? Here, we had an OPEX here. So let's say, so what do we have? 57, 56.17, the close yesterday. Okay. So you can pick 56.20 call on an XPX 3 weeks out until next OPEX and see how much it's going to worth. Keep in mind the next 3 weeks, every single day, you're going to have a time decay and hold it for 3 weeks and see, and then wait for the OPEX, and then we'll see what kind of a settlement printer you get and what kind of payout. He's not going to have any payout because spreads is the best way to trade options. It defines your risk. You risk $1,000, okay, and you says like, okay, well, my payout is 1,500 bucks. So you could max this thing out if you got the big, huge pop, and then the price can hold, and then you have to just chew time, and then each day the call that you're short, it decays every single day, and then you just able to get all the premium from the call side. You just want to flush down the premiums on the call that you're short. But if you just buy $1,000 worth of a one single call, yeah, your upside is infinity, but it's not gonna worth anything after 3 weeks because you have a much higher time decay. This is why I always, like I always look to try to do trades like say like 3.5 to 4% premium. That's like if you notice, like normally I'm in this kind of range, you know? I don't go too crazy into a 700, 800 per one contract. And I'll try to throw either 5 or 7 contracts paying this much premium. So if I'll risk 1,500 bucks on a spread by trading 4, 5, 6 contract, depends exactly what I'm paying here. So I try to keep the risk versus reward 3,000. Okay. You risk 1x to make 2x. So the right way to risk to, I mean, there's no point for me to make a spread to pay 1,500 and it has a payout of a 1,500. So you're paying 15 to make 15. I don't do that. I try to do three to structure the trade. In this case, if you do manage to get 1,500, you got a 100% return on your premiums, right? And if you get to a 3,000, well, you hit a jackpot. So from here, I mean, if I could make a 500 bucks this, I'm totally fine with it. So it all depends how you size up your trades. But when you have three versus even 1 to 1 compared to 1 to 2, your odds of making 500 based on this is much higher if the price is going to move to the upside because you're paying a slightly little less for the premiums. So when you're trying to structure a trade, it's a 35 deltas are it's a 35 delta trades are pretty good. I try to even I try to do 50, basically add the money and then sell something 35, you know? But if you just buy a call to the upside, or if you're trying to buy a, if you want to try to buy a put to the downside, 35 delta is a pretty good, 35 delta is a 35% probability that the strike will be in the money. That's what it is. And 35% probability on a trade is very, very good, so it has decent premiums, good probability. Some guys do 30. I like 35. 35 I think is a good one. 30 is good, but if you just want to go up to a 50, half that your call will gonna be in the money, yeah, you're gonna pay more. So it all depends how you size up your trades. People are going crazy, to be honest. Some of these guys here are risking their entire life on some of these trades. I mean, I'm not throwing a bunch of trades because I'm trying to fight this thing to see which way are we, what are we, where are we gonna go? But at the same time, I mean, guys are in heavy on one trades and just getting chewed. Yeah, I mean, hey, if a stock is coming down for 7 straight weeks in a row, goodbye to your premiums. That's it. There's nothing. I mean, I don't know where the bleeding stops. It's like a once in a lifetime kind of a decline that we all seeing right now. This is not a this is not very common for these kind of a huge company to wipe off this big of a market cap just in a matter of weeks. Based on what? Nothing is he has even effect. It's all talk, negotiation, this and this, but he just threw a deadline on the world. Okay, April 2nd, you don't do it, that's it. This is gonna be that it's gonna be this way. This is negotiate. Anything can change. Then yesterday, yeah, well, there will be a break. That's it. It just, I mean, I mean, it irritates you really to hear this kind of a nonsense, every single day. And some of these news, they're just gonna rub it really, really good, especially CNBC nonstop. They had that girl standing over there in a White House lawn and just like president said this, president said this. Oh, they're just ready to break that what comes out of his mind. And when the last time he went to a bathroom, they're just gonna tell you everything. So we'll see how it goes. What was the MS? There's some wave counts I was working on. MSTR looks good. It looks like a three-way move. Um, Same complex, whatever that we were talking about. Three down, three C as a diagonal, three up in connector X, five down, three up, five down. That's it. So you have your zigzag here. So from here, if this low right there holds, it's the same thing right there. Look, we're trying to fight this channel. The price can break. And we need a 5-way move to the upside after 3 down. So it doesn't matter how this goes, whatever. You're looking for, if you're looking to go up, these are your targets. That's what I look for. So I know where my support is. I know what the upside is. So 38.2 at 320, 3-year high is at 333. 50% of this decline is at 354. That's the first zone. This clears 61.8. Resistance here to connector X, 78.6. Second zone. That's it. That's how you read charts. So I'm gonna color them for everyone too. They all color all most of the time. Yellow zone is where we consider to buy something. Green zones that we target. That's it. What happens here? How long does it take? I don't know that. Neither do you. Okay, we just simply don't know. All we know is where the support is, where the resistance is for now. That resistance right there, green, is the target, is what you're trying to target. If your target hit, are you going to close the trade? Are you going to book up partial profits? Or are you just going to let it run? That's the decision you have to make. Okay, you have 3 decisions to make against one. I always says that as long as this law holds, okay, I always address it more because that law has to hold. Because if that law gets taken out, well, then we have a lower low. That means that price is still making its way to downside, not to the upside. So where this one will end, if it ended here, it was already here, it's gonna end here, then we're gonna have to, I don't know that. It's not our business. It's not neither do your business to figure out where this 1, 2 go and where it finds. No, don't do it. I don't just this is the only thing that annoys me so much every single day is to fighting this the initial move. Do we have a 5 here? Can we gonna have 2? Oh, I'm looking for another new low to the downside. Well, how are you looking for another? Okay, well, fine. You can sit and think whatever you want to think. When the low is gonna come, the low is gonna come. We all gonna see it. But no, this is what I want. Okay, well, I want a lot of things in my life as well. You just look for the low and the upside. So if you see this on a wave count, or if you see it on a swing, it, I don't want to sit and fight this and start counting these small little waves here. No, it takes time, and it just too much of a movement, and you're always like moving things around on a smaller scale. It just what's MSTR 304? First target is 320. Okay. So 320, 333, 354. That's the first zone. That's what we look for to the upside if the price managed to go there. If the price is gonna go here to the wave one, then it backs off. If the wave one is already in, like this, I'm ready to rip to the upside. These are the things that we're gonna find out when we're gonna have more price data. We don't know that. So downside is here. So What do I have open? Netflix. So Netflix had wave one, down in two, up in three. So this three here has five smaller waves, one, two, three, four, and five. So we have five within a three. Looks like a completed three-way move to me. Uh, some sort of a funky looking, weird. Yeah, we can do this. ABC. So you can do, we need five within the C. So if this is all of four, okay, so what do we have here? Our low is here, okay. We have a low, and we know this is some sort of a fourth wave. So basically what it did is like it filled up that earning gap, okay, that it had that huge move to the upside. It's all got taken care of. So if this is all of three, so the three-way move is in a fourth wave. So this fourth wave is against this two right here. So in order for look for upside, we have 7, 8 points to 1,015. We can do 6, 8 points. No, is it this one? God, my goodness. What is the, yeah, 61 point. Still sleeping. Okay, 61.8. 61.8 is here. We can do 50 here. So we're right here in between this. So the upside for Netflix 978, which is 60, so it has already recovered 50% of the initial decline, and 953, and then 978, 78.6 is where the 1,015. So this has to break to take out this high. Remember 78.6, right? That's where the decision gets made. So this high, this fib right there, need to take out this high. This high gets taken out. That's going to be a clear shot to 127.2 fib extension. All the upsides can come into a play after breaking 78.6. But for now, the price is sitting right here in this. Can it reject? Then it can make a move. Can it fully reject back to the downside? That's the risk. That's how you kind of just look for these big, huge stocks that trade into close to $1,000 price range. Tesla is kind of, I'm pretty impressed to be honest. It's just starting to move. This wave count that which been we've been tracking since this week is starting to act and starting to play. But this is a low right there, 217. Um, we can count them as a five to the upside. I tried to make a case for a flat, but this is a three-way move. Remember, we cannot do um, C here on a three-way move. It's not right. So it doesn't matter. sorry, it does matter, but on a C way, C we need five, not five, or not three. It's not that just doesn't work. So now if we take initial, just a measured move, WXY 100% 222. The low we put it on was 222.28. Pretty impressive. So all eyes on this. We closed at 249, okay? And we just looked it through that last week was the hammer week. This week, Tesla did close on an inside weekly bar with the hammer, okay? Which we looked at it earlier. So we have double hammers on a weekly candle. But it didn't, because Tesla didn't make a new high. You see the new high for the last week high was 251.84. So we didn't break above 251.84 this week. So we went a little bit shy. That's the low of the last week, and that's the high of the last week. So we're closed right there. So we didn't make a new high. So it closed the week on the inside weekly bar. So we still got some work to do to make the way to the upside. And the stock is pretty beat up, as we all know that, and is due for a relief rally. How rally goes, we don't know because once Tesla runs, the sucker's gonna run hard. Um, but we're just gonna watch our levels, see how far do we go, where do we find resistance, all this and this. So, so got five, three, smaller five, and one. I have them as a two here. And then from here, we're trying to see if we can get to three versus one. So the 3 versus 1, which is 161.8, is at 262. 262, 23.6 from peak to trough decline, okay, of Tesla, which is the whatever the 50% decline, is at 262. See, that lines up really good. And if you notice that 2 days ago or so, I was saying like I'm looking for a 262 upside this week. Well, didn't happen. It's okay. But that sounds like, okay, if 3 versus 1 is here off from this low and we have 23.6, so we should be able to go there. Should be able to get there. So we have this 3 versus 1, okay? And then if we take a 100% a measured move of the lows, this move projected from this low is at 257. Right there. So we have a measured move of 100 at 257. We have 3 versus 1, 262, and we have 23.6 from a peak to trough decline that we roughly have 50%. So this is our first zone now, okay, for this Tesla to go there. Now one is gonna go there when we're gonna break this. Remember we just talked about 5, 3. Now we need to break this. It's exactly the same thing. 5, 3. Now we need to break this. Then from here, we look for this zone. That's the plan for now. If we don't break this, if we don't, well, yeah, 251.84 and backs off, well, then this is something different. That we need to go back on a bigger time frame. Just sorry, go back like this. This is the high right there. Is to see what the heck is going on here, you know? So but not gonna change anything till as long as these low holds. So the initial five-way move from here, look how close it came down here. So what was it? Two versus one. Yeah, 78.6, 224. 100% relationship was at 222. So 222 and 224, 78.6 is the where decisions get made. It held, made a move back up. So now from here, this goes here. When this how the actual wave count works, goes here. Now you got the initial breakout. So once this the 230 will stay here for now. You can actually move this thing up to here to be a little bit more. And then from here, once this third reaches 100% to or either um, three versus one, then we're gonna have a clear invalidation goes here because this third will be somehow will be completed unless if the third will rip to the 200%, that's we can open that one upside. But then this fourth wave will come into a play that needs to stay above. You see how Elliott wave is very good once the wave count starting to move. You just keep, but you gotta have to buy a lot of time as well. Once you will have five-way move, find entries here as long as this low holds. And then from here, but this is days, this is weeks. This is 2 weeks of price action here on a 20-minute chart from here. That's 2 weeks. Most people cannot even hold trades for 2 weeks. I know that. They just want instant payouts. Throw the trade, let it work. Boom. I mean, hey, we're all humans and some people have high expectations. I totally get that, but sometimes you gotta be a little reasonable. This is not a win-win game. If that's the case, nobody would be sitting here. You're gonna have speed bumps. Just it's just the nature. That's just the way it is. You're gonna have down March. Okay, well, fine. What can we do? We tried, didn't work. Doesn't mean the April's gonna be down. I had one down month, last year, even a year before as well. Everything will be fine. I'll tell you when I'm gonna size trades. I need a. See, the thing is this that I know, like like just like when you get dips, you get some of those buy signals. I'm not getting buy signals. That's the thing, though. All I'm getting right now is those mean reversion signals because after the extreme beating, you know, you're just getting those mean reversion signals. Those are not buy signals. That they're just totally two different, you know. And we're just like gapping up, gapping down, gapping. It's crazy. Like how is like even this stock. Look, okay, here's a low gap, gap here, gap here, gap here, gap here. You see? I mean, think about for a second what this thing will do to premiums. This was 1 week before, so you have one. two, three, four, five. Five gaps, back and forth, back and forth. It's a high beta stock. I mean, this gap right there, basically from 237 down to 230, that's 7 points. Well, 7 points, if you have, let's say, 35 delta trade, okay? That's 245 bucks right there, plus the time decay that you had over the weekend, but right from the start. You're down like roughly like 300 bucks just over a gap, you know? Then you're gonna take this more beating to the downside. This is what the wastage of time because they're like, okay, fine, I have enough time now. So like, okay, fine, the price can recover. Now, if you see what happens after a couple days, price did manage to go right back up to close the gap. This time right there with that premium is this one that hurts the trade, you know? Then the thing is like, okay, so you enter a trade here. Now we gap down. Now we're taking more points. Should we just do close the trade? Okay, that's just a loss. Move on. He just got punished over now, just a gap. Then price just went under pressure, this and this. And 3 days later, the price recovered and went right back to it. These are decisions we all have to make at some point, right? What should we do? Should we hold? Should we just cut it out? So if you took a loss right there, I mean, imagine holding a trade for another 2, 3 more days. If you had a spread, it might just break even. You could have made anything, or you're probably close to breaking even instead of just taking a fucking 17-point loss because you just got all panic like, oh shoot, that's it. This is trading. This is what we do, every single day. All we do is just making decisions. Sometimes we make good decisions. Sometimes I'm like, you know what? Yeah, glad I did it. It's always like this. Sometimes we book profits. How many times we had trades that we just hit a certain exact target and then just backs off. And right away, someone like, oh, glad I booked it. It's just how many times it happens? It happens a lot. That's why I try to set targets in a trade. As like, if my target hits, I'm out. I mean, I'm well aware of it that the price can go even higher, this and this, but that's just not the point. My point is like my target set at 257. If my target hits at 257, I'm out. Now the price can go to 262. Of course it can, but that is just not the point. You define your risk. You say like, okay, I want to take a position here or whatever you start your position. My target is 257. 257 against either this low holds or this low holds. And I'll just let this thing work and see if I can get to 257. Set up a price alert here, 257. As soon as it's going to get triggered, you take your profit. Now the price can get to 262, it can get to 267, 270, 275. Of course it can. Price can get to 257, go up one more point, and it's going to come back like this. You want to say like, wow, glad I did. How many times does that happen? Happens all the time, you know? I always sees that where I have because I always have price alerts because I'm always looking and doing something else. And I have a full screen of Mag 7 stocks and whatever that I'm trading or whatever that I'll just set up a price alert. It's like, okay, the price alert is gonna go. I mean, it's gonna send me a text message on my phone. It's gonna pop up an email to my email. I was like, the alert is gonna go off. I'll know when to take the trade off. Just I have time. I'll just screw it. Just let this thing work. I watch the open. I'm always like just first hour. because that's then after an hour the volume kind of dries out, and then after that the last hour. And that's it. I'm not really sitting and looking at positions all day long. I don't do that. That's just the worst thing you can do to yourself. I'm always looking other stocks, see where how all the other stocks are doing and what we can find, and what is working is working. I know what I paid for it. I know what I can lose. I've I'm well aware of it. If I'm taking a thousand or a 1,200 or $1,300 trade, I know I can lose 1,300 bucks on a trade if it's gonna go down 7 weeks in a row on me. Which is fine. Well, if you're gonna take a risk of $5,000 in a trade, and yeah, those are big numbers. Well, you're taking a big risk. So we'll see how this thing plays out. I mean, inside weeks are always tough. Never know, the thing can puke right back down. There's nothing great about Tesla these days anyway, so but I think it's due for a bit of a relief rally because the rotation definitely starting to look good. And it was way down. Remember, it's just pushing all the way back here. So it's definitely, I mean, worst case is Tesla can go like this one more time and then make his way up again. But the point is that once it's out here in the improving quadrant heading northeast should be okay. So we'll see. We're gonna watch and track this sucker every day. Um, I would to be on the reasonable side if I would have to put a price on Tesla right now, I would put at 313. That would be the price for now that I'd be looking for to the upside. Okay, that's the 52 weeks high and low mid number of this stock. Okay, so we at 248. So we got room. So every time when I post this, you see this screen, just always keep your eyes here. Every time when the stock, so this is your 52 weeks low, this is a 52 weeks high. So whatever the price is, okay, whenever the price is going to find the low, the mean reversion, when it's going to come back into a place, is going to hit this mark from the downside to the mid, or from the top to the mid. I see this thing happens all the time. Okay. I mean, how long it will take, we don't know that. So just always pay attention to the midpoint. Let's see the 218, 212, 163, 69, 177, 117, 114, 196, 197. See, Amazon sitting right in the mid. 391, 422. Netflix went up. It was down. 803. Meta, 596, 577. Price is gonna make its way back to that's what my point is, to the mean reversion. Always pay attention to this. I what I'm trying to do right now, because this is something new that I did it with I can do this thing on any chart now. Scripted thing, get rid of this thing. I don't need this. I did this thing. So this is Meta. I did this is these pivot points right there. So the meta 52 weeks low is 414, 52 weeks high is 740, mid that we just talked about 577.70, right? 577.70. So we're gonna have, jeez, we're gonna have this now on a chart right there. That's the mid zone. That's the mid right there. See where the so whatever the price made a high, see, made a mean reversion right back here. I can show you a bunch of charts. Any chart that you wanna tell me, I can show it to you. So we have this now. So I'm gonna keep them on a chart, right? So I colored this thing. I colored this one green. I can change it if I want. And I got this thing green. So that's a 52 weeks high. That's a 52 weeks low. So the reason why I'm showing you this, that every time if I will show you a chart, you know exactly what to look for and what price to look for and how to read that. And then the middle zone is 316 and 539. The mid is 577. So every time on these Mag 7 stocks is going to come down to the midpoint is where they're going to start making the decision. So from the midpoint right there, your first initial target to the upside is always going to be your upper wing, which is 616. It's your first initial target from the mid price. Mid can come down a little bit more. That's just not the point. As long as the price reaches the mid, is gonna bounce. Look at this bounce here. This one and this one. It's gonna bounce. I know that. It's not just gonna slice through it. Jeez, it's gonna stop this thing. 5% move to the upside. So it's just the point to like how long it will take to go back to 52. That's just not the point. The point is to, if we have the initial decline on a stock that is coming down toward the mid, okay, where is the zone that we can build is where we can find entries and see, and then we can make our way back to the upside. That's what it is. So now we have from here, we have our swings, we have our wave count, and we have all that kind of stuff, right? So we can do all this. So there's just, it's NVIDIA. So NVIDIA came 52 weeks high, came to the mid right there first, got a huge move to the upside, came back. Look at this low right there, 105.22, bounced back up again. So it's right in this zone. It's pretty good. we can find, we can start looking for entries now on stocks in between the zone from now on as well. This is what I do all day. If you like always trying to see like where we can fine tune and trying to see if there is weakness in the market. We get that, right? And we want to buy something at a certain price, okay, where we can buy stuff, where we. So these are the mid zones that we're gonna find our entries and make our spreads and try to see how we can, make our trades. Like, like imagine a price would have come and hit this mark. Yeah, it came down a few bucks more. That's fine. You pick like, let's say a 114, because this number right there is not gonna change. It just stays where it is. It's gonna stay as is until the new 52 weeks new high is going to get made or new low is going to get made. Other than that, this number is gonna stay where they are. I just want to let you know. So if the price is here, okay, let's say I'm just giving you an example. Let's say the price comes down here, so it cleared out this zone, the selling pressure exceeds to the downs. You're thinking like, okay, as long as we don't make the 52 weeks low, what would be the upside that I'd be looking for? I should be on this and this. Okay, 105 and 115. Price is sitting here at 90. So if you can manage to play this move back to the upside, because what the price is trying to do, price is going to try to make his way back toward the mean reversion, to the midpoint. Okay. A lot of them I did. Uh, Apple. There you go. Where's it dancing around here right now? Don't, I mean, like Max 7s are very good stocks. Don't get me, they're just, once they're gonna hit, I mean, they can come down a few points. That's just not the point. But not the point is we need to see how price is gonna respond. Look at this. So I'm testing this thing. These are very good entries for spread as well for the trades. Keep that thing in mind. You can easily make a really nice spread from here to here. 212 to 223 strike price. Think about it for a second. Are we looking for good entries, right, on our trades? So if the price come and hit this mark, a midpoint, so like, okay, fine, I know where my midpoint is. Or with the upside, you take one strike here and you sell one call here. So now you have whatever. So you have 223 minus 2, 112. That's 11-point spread. 11-point spread, you go out at least like 2 months on time, let's say. On 11-point spread, if you can even get this much move, you think that doesn't pay? Of course it does, right? So this again, this is new. This is just I've got like a couple days ago. So I'm gonna be making a start structuring a bunch of spreads, or you can, if you don't want to do a spread, say like, okay, well, I just want to pick up a single call at the money. You can do it right there at 212. Now I want to go out of the money because I don't want to pay that much, 223. So you just look for that strike price, or just get like one lower or two lower strike prices. Basically, what it is, the target is this, is to see if the price from midpoint is to get to this zone. And then from there, if it opens up, then it's fine. It can always go higher. It can always come down lower as well. But if we define our target from one area to another one, I think it's a hell of a trade. Excellent with excellent payout. What other stock that I want to do? So I did NVIDIA, Meta. Yeah,
Amazon.
there's Amazon. So it's right there. You see, like it's been fighting here for this is a daily chart. So you got 3, 4, 5, 6, 7, 8, 9, 10. That's 10 days. You see, like it's 197 is the number. So if we're gonna attack Amazon, okay, and last year didn't work out. This is freaking nightmare. This thing came down. Um, if the next trade on Amazon, we would have to structure from here to here. The worst case is this: if the price comes back down here, add one more at 186. Just find entry here in the zone. It's gonna pay something. Just, I mean, whatever time we can some just it will pay something. You can either play a 1 day move, something like this, for like 4-point move to the upside. That's your payout as well. That's money as well. It's a very good zone to find entries and to make really good spreads on from here to here or here to here. But the same time, if you coming down, if you trying to target on a bearish side, then you just structure something from this to this. What you're looking for is the mean reversion toward the midpoint. And the midpoint is gonna get hit one way or another. I can show you that. So I just script the whole thing. I think I gave this thing to Scotty as well. He's not here. Scotty's here? No. Yeah, he have it. But I was gonna explain it to you. But that's just we have it. That's it. It's not gonna go anywhere. Once I have a saved script and we can just keep it here. Broadcom is not gonna show. Let's see. I don't know what the hell is wrong with this Broadcom and my optimize just doesn't show right. Still showing that 1851, 52 weeks high because the stock split here. It's not gonna work. What do we have here? Look at S&P 500. As a matter of fact, let me show you that. Look at that. So 5400 is the next downside. Keep that thing in mind. This is our third zone. The mid is 5550 on an S&P. Upside is 5691. That's exactly where the price is struggling right now at the 5700 mark. We just looked at on a wave count. Who you think is going to give you all this? Look, finding trades and making trades, I'm not worried about that. Okay. And I'm I'm a trader for a very long time. And I've traded the currency market for a very long time and I've traded stocks for a very long time. I'm very well aware of it that I will have a bit of a speed bumps like everyone else does, but it's going to be a very, very short period of time. Just trust the process. I can turn things around really, really fast. You don't know me yet, so just hang in there. You don't know what I do all day. We're going to be fine. We will be fine. You don't have nothing to worry about that. What do we have here? On a spy, I can give you that if you want to look at this. Yeah, 553 and 567 on a spy. These are great trades, to be honest. With some time in hand, you can find some excellent entries, um, you know, with to play a move to the upsides and to the downside. Okay, so the downside will be this one will be a 539.45. That will be the downside zone toward this low, basically. 52 weeks high, 52 weeks low. I think it's a great way to and we're gonna trade this, don't worry. Next week I'm gonna start. So I'm watching a bunch of wave count, like sorry, the swings and stuff, and but I just need some rotation and we can do QQQ. It's gonna be pretty much the same right there. 476, 461, 492. So if any relief rally, if we do manage to get to the uncues, that will be 492. It's the only that's the strike that I I did a spread yesterday, as you can know, as you can see. I did 495, 500. I did it because of this. I'm trying to take a shot and see um how it plays. I got time until 17th April. It went up like the old $300 yesterday, just fine. I can still like as you know, the point is like I can still close it if I wanted to, but that's not the point. Point is to at least get to 492 if I can. That'd be nice. So I did a 490, which is slightly below here. Then that's the call that I bought. And then I sold the 500. So I bought the 490, 490, sold the 500, sold the 500. So that's the spread that I did yesterday. I don't care about the one you're selling out. All I care about, I need to get this sucker in the money. You know? Yeah, this is not worried about this. Worry about this. When I go from 480 to 490, bring this guy into the money, and then let this one plays out. That's it. That's your payout right there. Because this one's gonna decay anytime with the move to the upside. So we'll see what happens. Um, we have 490. What did the close yesterday was? Yeah, 480, 480.84. So if you can just move this, get this move in a couple days, so whatever, it's gonna be nice trade, nice payout. I'll take it. Whatever happens from there, then we'll figure it out. So if you have any other stock, you can let me know. I mean, I can always do a screenshot and I can just send you exactly um what you can look for, and we can make some good trades. That's what I'm going to be watching because I have a 54 to the downside because we didn't really close. 55.50 is the mid here. 55.5409. Let's see a second here. 5409. It's gonna be right here. See, this is why I draw this zone. Okay, good. So it fits right. If this wave if it plays out, because the upside 57 is right there. See, this is where this price is. 57. 57, right? Yeah, 5703. It's just this high right there. Okay. You can do you can do it this way as well. I can so we would have can do three of these and then just 5691. Do this. Maybe this way I will have it. 5691, 5550, 5550, and this one. We'll just keep them on a chart all the time. And then 5409, 5409. So now we will know every day where is going to be. God, extend this. Okay. I'll put a lock on it. Just lock them. Now we'll know exactly where our mid is. Hang on, let me do this. I remember, oh boy, my blue color. Make this as a blue. turn this into a red, and then this the blue. So that will match the one I have there. You can do this thing on any chart, but it's like to have them on a wave count. 5409. Because if this breaks, I this is coming into a play. This I can we this because the wave count is going to be wrong. First of all, this wave count is wrong. If we have continuation go, this is going to come into a play 5400. So just to keep in mind. So that was 5550. And if I would have known this thing a couple of weeks ago, man, I would have freaking make some crazy trades, to be honest. I would love this 5550. I would have made a spread like this to the upside toward 59, 56.91. You know, I can trade the payout. I'll leave the sucker out for like 3 months. I don't care on a spread. You're moving from here to here just to target this. Yeah, huge payout. It's okay. Now I have it. 56.91. Good. So now we're gonna put a lock on this. It's not gonna go anywhere. Leave it like this. Okay. Now we know exactly where our mid zone is. And look how much price. Like from 55.50, which is right here. Look how many times this price has bounced from here. Came back down here. Another bounce. Then made another low. You see? Finally put a low at 55.04. But how many bounces are here? Think for this bounce right there, looking at, let's say, 55.50. As soon as the price hits, you see how the day is going. If you open up a trade here, 55.50, and you ride this sucker back up to 56.36, you're riding 50, 60, 70, 86 points to the upside. Wow. You can make your freaking entire week. You don't have to trade anything. Yeah, these are good entry points. Very, very good. Yeah, we can scan the whole damn chart. I mean, it doesn't look, you have to look at this way. The price doesn't mean that it cannot come back down here. It can, of course it can, if the price is going to be under pressure. But the point is that the price will make the move back up to at least the first zone here instead of the mid. Mid is always the ideal number. But this print right there is the one the price will hit eventually. Okay, it's just a matter of you just gotta have to time the sucker. How long is it gonna take for the price to make a move back to the upside? So as long as I mean, as you know, we're doing a daily chart. As long as we can, let's say we can go out 2 months on a time. I mean, we can close the trade the next day if that move happens. But just to be on a safe side, a month and a half, close to 2 months worth of a spread if you do from one strike to another. Yes, still I think it's a decent trade, so we can squeeze plenty of them out from here from now on, right? So that's what we're gonna work on. So I'm doing a Qs. We'll see what happens, and then we're just gonna do the other ones. So we're gonna hunt for for stocks as well. What's the other one? Is Microsoft, I believe. See, Microsoft is near this 52 weeks low from this range. So it's 411, you know? Sucker, it's just. Now keep in mind that, just wanna let you know one, if the price moves lower, it will automatically adjust because I already scripted it. So if it's gonna move down here to, let's say, 370, these numbers will drop as well. Keep that thing, just remember that. These numbers right there will remain as is as long as this low holds. So the price has to finally make its way up toward this price first. That's the payout against this low. Just want you to remember that. And that if this low gets taken out and if it makes a lower low, of course, the trade is going against us now, right? And then these numbers are going to drop as well. So that's the plan, and that's how I will be making some of these trades. Target this. Now, if you want to throw your bunch of moving averages and things like this, you can do that. I mean, that's that's fine. Well, we did Netflix or no? Here Netflix. See how this it's crazy. Good, it works, huh? What is the other one we have? Google. Here you go. You see, now here's an example on Google. See, Google went through all three of them. Now what we can do is this. We can take this. Here we have our 78.6. 78.6 at 160. Right? So the target right now for Google is at 163, 170. That's what that's what you would target for now. 170. 170. And if you planning to make a spread, it will be 170, 177. It's like a 7 point wide spread. So you go out of the money. Basically what you're trying to do, you're targeting 170. If you're gonna do 170 on a single call, of course you're gonna have a much negative theta against you. You're trying to cut down your theta, you gotta go up with the spread. You can go out of the money with the spread, you're gonna have a little bit less time, time decay. So that would be the trade setup for Google. 170, 177 against the 160, which is a 78.6. You know that 78.6 doesn't really break that easily. It trying to kind of made a fake move to the downside, but it reverses back to the upside. So 170, I mean, it's a pretty beat up stock the way it came down. Unless, I don't know, it was going to 147. Well, we don't know that. But the upside, what we're looking for is to see if we would buy something at 78.6 to see if we can target the first area here will be a 170 price. So from 163 to 170, that's 7 points. 7 points, 100 delta trade, that's $700. I think it's a nice way to structure your trades, don't you think so? I mean, depends how many delta you wanted to play. I mean, if you do a spread from here to here, you can do that as well. It'll be a lot cheaper, less premium, and then you just structure from there. 4 weeks, no, sorry, 1 week. Last, hey, you know what? I mean, there is one thing I will say is I haven't seen this, I don't know for how many years. This mean reversion signal of mine up this week on a weekly time frame, and I haven't seen this. I've seen them on a daily time frame and not on a weekly for a long, 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 long time. Even the fact that we did even have 10% dips here as well, but it didn't triggered. This week it did. So I'm gonna be very curious to see how next couple weeks plays out in the market, to be honest, after this. I haven't seen this in a very, very long time. So anyways, let's see. I'm My time window right now that I'm trying to track time is 5 weeks. The reason why I'm doing this is because the last time we put a low here after 4 weeks, it took 5 weeks to to make that high, to um, for the high to get taken out right there. So it took 5 weeks here. It took 5 weeks on this part. So you have this initial decline, 10.9. So you have one, two, three, four. Why is it going three? It's got to be six. They're counting six. That's six. Oh, because it's counting from here. Okay, I'm gonna move this sucker here. Okay, six. This is nine. Oh, gotta be nine. Okay. So the first one was nine. This was six. This was six. So this one has to be six. So six. So we have one. So five more to go. Interesting. I'm a 100% buyer at 55, 5400, 5400 for on S&P. 5400 to make a spread 55, 55, 50, 50 point wide spread will be nice to the upside for the bounce. You'll buy a 550 call. That's going to be expensive, but almost a 150 point move to the upside. Crazy payout. If you're right. Chopping around here. Let's see. I'm start doing it on all these charts here now on a daily. I like this zone. So now I have my swings along with those mid zone, and I have the targets to the upside as well. So there's your Tesla. See, 272, 313. So 272. Oh boy. So that basically will eventually complete a five-way move. There you go. 270, 135. Perfect. This is this is nice. Okay. Now we know exactly what to look for. 271.35 fib. There it goes. Matches with 272. Good. Very good. If it does make a new low, which is fine, but we're still going to target this 271 regardless. Because it's not a, because the 52 weeks low is 138 anyways. So it's a long way down. Stock is already, yeah, it should. I mean, 313, fine. If it comes in play, that's fine. But we'll take, try to keep, we just keep it. This is the problem. The swing is down. You know, we need swing to go up. That's when things will get changed. Sucker need three higher highs. It's not getting one. Um, I love you mean you can look at 354. It doesn't mean anything. You know, when the swing is down, you need this line to to go up. It's not, you see, it's just down. It will, I mean, once we'll have three higher highs, but you don't have it yet. You see how 52 weeks low, how the price made a mean reversion. That is crazy. This is how that works, man. Seriously. This is something we're gonna be working, trading for a long time now. These charts are really good. Ziegler. It's a nice way to even look at the price, like on a one single chart, you know, like anything that you even have, you can. Oh, actually, price actually moves around in this. This is this PDD. Somebody was asking about this. It's right there in the mid, back and forth from last 5 days in a row now. 126, 135, 117. That's a, but you know, at the same time, you don't want to get chopped up like, I mean, yeah, there is moves here. Of course, these are all payout. I mean, from here to here, yeah, I mean, price did manage to rally. The very well-defined good targets as well. Barely made it, didn't really. It's expensive stock. There's the doggy. Doggy took a lot of beating. Used to love this stock. Now I just, damn, look at this. It's almost put a double bottom here. I don't know what happened to this. I think the earning came pretty brutal. There's Costco, 887. Got a nice pop yesterday as well. These are good entries, to be honest, for our trades. You know, look at this. These are very good entries. Stretch some time, you know. That's your app loving. I don't even know what this company do, to be honest. Very high beta stock. 292, 347, and 238. The low was 234. How can you beat that, man? Seriously. This is good. Good stuff. Amgen, Airbnb, Apple, we already looked at them. Yeah, oh boy, not touching this. What's this? T-Mobile, Team, Choppy was sitting right there. Oh boy, this is a disaster. QCOM. Yeah, QCOM is something to keep an eye on. You see how close it went to 52 weeks low, but didn't really. It's trying to fight this thing here. God, that's an ugly price action. Ugh, it's like a ping pong. Brutal. That's a 52 weeks low here. Look at this move here. I'm pretty sure it got adjusted because the price came back here, made a new lower low, lower high. Didn't make a new low yet. This is tough to trade this kind of a price action. Here's another nightmare. PayPal. Some of these stocks I got killed, man. Look at this Nvidia right there. Nvidia 115. You know, looked at Nvidia. 115. Nvidia swing is up. I know. Because Nvidia has, you see Nvidia put this reversal bar right here on the daily time frame. And the, why my mouse is kind of goofing around. And then, you know, and then from here, see me 1, 2, 3, boom, that's how the swing turns up. So for NVIDIA, 114 is our mid. Which was tested here once. Got this move up to 143. Then we made another lower low. NVIDIA is making lower lows and lower highs. That's not a very good sign. See from here. This is the high. I wouldn't even call this a lower high. It's not a lower high. That's the high of the stuff. That's the 153.13 is the all-time high. Like from here, your low, lower high, lower low, you know. And NVIDIA needs to get above 143 to turn this thing. But in the meantime, I mean, that's it can come into a play, but that's this decline right there. So 123 to the upside and 114 range. So that's the range. It's nice. This bounce from here to here. A nice, be a very nice payout. It's okay. We're gonna chase a lot of trades now. Netflix, what they did. MSTR right there. 322 and 347. So I'm gonna keep an eye on these. Oh man, what's going on here? Some of these stocks are just this thing gonna take forever to go back up now. Microchip technologies, another. That's a Marriott. Stock took a hit as well. Nobody's staying there. Here comes the Lulu. 324. I'm kind of interested in this stock. I was looking at it a couple days. I was going to address it, but it's just this used to be a $750 stock. It got split. Lam Research. This is a 1-2 swing. You know, this stock works really good with fibs as well. Keep that thing in mind. So it just has, we put a 52 weeks low here at 68.87, went straight to the midpoint, 90.94, backed off. So it's in a second swing, 1-2. I mean, I don't know. There's nothing great about semi stocks. It's just, it's in a very tight zone. But the range is very, like the ATR is very low. Oh, where's my yeah, see, it's three and two. Yeah, okay, 3-3. Yeah, it's only it moves like 3 points. So 75, 76, 77, 70, 78 puts you right there. It's gonna be a tough one to fight. Plus, I gotta size up that trade like this for that to play a 3-4 ATR plays, or you gotta size up those trades. KLA, ISRG. See, they're all Google. We already looked at them. 170 is the price to keep in to watch for. Fast. Whoa. 11th swing. But you got a whole 70, you're gonna be in big trouble. In big trouble. This is very, very high count. Dash. Nice pop for 170. Ooh, this one is damn close. But you gotta hold this low. Fight and hold this low. This is a nothing 1.9. These stocks hardly move. So, yeah, daily basis. CrowdStrike 350 is written right there. This is we're gonna do some good trades. Hopefully, finger crossed. One level, one zone to another. I'm gonna set up price alerts on these stocks. Just as soon as the price alert hits, when I enter the trade. So I'm gonna work on those. I gotta whatever stocks that we normally trade and just set up a price alerts here. The alert goes off. I can't sit here and watch all day. All these alerts pops right there. So if I could just do, I can do Optima has a very nice alerts. The let's say I want to buy it here. I don't know, just 42.34, 42.34 right there. So as soon as the alert goes off, I can enter the trade. The light is going to turn red anyways. They have line alerts as well, I believe. I never tried that one. Draw something like this. Add line alert. See? So now you can set up now you have a line alert. So that's the alert. So as soon as this trend line will break, alert goes off. Yeah, good luck with those lines. It can poke in one point and then make a reversal. What is he asking me on a mint? Can you run those 1-2 swing on both daily and weekly? What? Run on what? Okay. ASML dead money. ARM 125, 119, 125 swing is down. Sucker didn't do anything for the whole week. 4 days it just made lower lows. Monday was good, and then Tuesday, Wednesday, Thursday, Friday, 4 days just, yeah, that's a resistance right there. Previous swing resistance. AMD. Hmm. AMD resistance is 121, 130 is the upside zone. If this low holds, that's the zone for the AMD to the upside. I hate this stock. So 120 and 130, you're, I don't know, if you like AMD and if you believe that woman is gonna come up with a crystal ball one day, 120, 130, leap spread. You can let the sucker work against the 94.73 low. I mean, if you want to do it, I can do it one, just let it work. Worst case, I mean, screw it. You know, we can do, I don't know, September, November call spread 120, 130. Just leave it, let it work. So we can consider that if you want to take this low of the initial swing down here as one. Our first one is at 130 anyway, so yeah, November, December, we can. I'm not gonna do. If I'm gonna do, it's gonna be like a one or two counter. I'm not siding. This sucker is. I hate this stock. You have to convince me. AMAT Autodesk. I'm gonna see. That's gonna be 52 weeks low. This sucker is gonna take forever to make a move back up now. Yeah, it just beat this much beating to the downside, and then to look for this much upside, it's gonna take a long time, right? Because you're gonna have first this resistance sitting in your head right there, 403. That's the low of this swing. And the high of the swing is 465. They have 455 here. Just a matter of like where the low is. If this price is just, this is the beating that stock took. Now after for 3, 4, 5 days, this for the whole week, stock didn't really do anything. And if it's just gonna kind of side chop, it's gonna make another low. Yeah, it's possible. It's just making some sort of a the downside selling pressure has stopped. As you can see, if it's gonna go something like this, then it's gonna have another push to the downside. So I'm not even watching this thing. It's such a great company. It's just gap here, gap here. Plus, it has a yearly lower bar as well. So this stock is done for the year. So then that's 100 stocks. We'll see how the Qs plays out with that. Got plenty of time. That's why I wanted to took a shot yesterday. Again, we can always trim lock profits anytime we want, but I mean it's all about finding entries. We have set our targets, set the price alert, and see if we have time. And yeah, this beating like this, man, it hurts to even look at them on any stock, this non-stop. Well, what happened? What happened? What can we do? The wave counts and all that kind of good stuff. Yeah, we can we can do that all day. But I think looking at some of these charts is where the heck it went here. This one is just yeah, like I'm not something interested in like something like this. Be interested like plain moves like this on good stocks, good volume, good spread, like bid to ask. Try to play a move toward like 616. And then once it gets there, I mean, you can always look for upside, of course. So the thing is this, it's all about the low. If we could just do this, there you go. See 613 came pretty close to 616. So from here we can do 38.2, which is a 638. The big question mark is the low needs to hold. Okay.